You've been told the housing market is broken, that there aren't enough homes, that it's all the pandemic's fault, that if you just skip the lattes and work a little harder, you'll get there. But what if that's not the real story? What if the housing crisis isn't a bug, but a feature? What if the market is working exactly as it's been redesigned to, for a new ruling class that's quietly buying up the American dream, one house at a time? They aren't your typical landlords. They don't live down the street. Their headquarters are in skyscrapers, and their decisions are made by algorithms. While millions are locked out, this select group is profiting from the very crisis crushing everyone else, and they have zero incentive to let it stop. Today, we expose who they are, how they're rewriting the rules, and what it means for a future where owning a home is a luxury, not a right. Let's start with the reality on the ground. For an entire generation, the dream of home ownership, the main path to middle-class wealth for nearly a century, is dissolving into a statistical impossibility. The numbers are just grim. Housing affordability has cratered. In mid-2025, one report found that a typical U.S. household would need to spend nearly 45% of its income to afford a median-priced home, far above the 30% threshold long considered affordable. That's not a market dip, it's a wall. The national median single-family home price has grown to 5 times the median household income, a massive jump from the 3.2 ratio seen in the 1990s. Even for people with solid jobs, the math doesn't work. A household earning $75,000 a year, think teachers, nurses, and skilled tradespeople, could only afford about 21% of homes listed for sale in early 2025. Just a few years ago, that same household could afford nearly half of all listings. For those earning $50,000, the share of affordable homes has collapsed from 28% to a mere 9%. The result is a widespread sense of hopelessness. A 2024 survey revealed that a majority of renters, 61%, worry they will never be able to own a home. They point to the obvious culprits: high home prices and the impossible task of saving for a down payment. This isn't just an economic data point. It's a profound social crisis. It's the feeling of endlessly scrolling through listings you know you can't afford. It's watching your rent go up every year, knowing you're just building your landlord's equity instead of your own. It's the slow, creeping realization that the goalposts have been moved so far you can't even see them anymore. The game feels rigged. And it's that feeling that leads us to the real story. So why is this happening? The official story is simple. It's supply and demand, the experts say. We just haven't built enough houses. Estimates suggest the U.S. is short somewhere between 3 and 5 million homes. Others point to stubborn mortgage rates that keep monthly payments painfully high. And those things are true. There is a housing shortage. Mortgage rates have been a barrier. But these explanations are dangerously incomplete. They're the convenient truths that distract from a much more deliberate shift in the market. While we've been busy debating zoning laws and interest rates, a powerful new force has been consolidating its power, using the chaos as cover for an unprecedented shopping spree. This isn't about your mom and pop landlord or the house flipper on TV. This is about Wall Street. This is about a calculated shift from viewing homes as places to live to homes as a financial asset class managed at an industrial scale. And this shift has created a new group of winners who are not just weathering the storm, but actively profiting from it. So who is this new ruling class? It's not a person, it's an algorithm. It's a portfolio manager. It's a logo on a rental application. A faceless entity that can buy 1,000 homes faster than you can get pre-approved for one. While ordinary home buyers have been sidelined, investors have flooded the market. In late 2024, reports showed investor purchases hovering around 25% of all single-family homes sold. Now, it's important to be precise here. The idea of a single corporate bogeyman buying up America is too simple. The investor landscape is varied. The majority of investor-owned homes are still held by small mom-and-pop landlords. Recent data shows these small investors make up the bulk of investor activity, while large institutional investors, those owning 1,000 or more properties, account for a much smaller slice of purchases, around 2 to 5% in many areas. But this is where the details matter. While large institutions may be a smaller percentage of transactions, their impact is magnified. They don't just buy a house here and there. They use sophisticated data and all-cash offers to target specific neighborhoods, often in Sunbelt cities like Phoenix, Dallas, and Atlanta, and acquire entire blocks. This concentrated buying power lets them set the price floor in a neighborhood, making it impossible for a family needing a mortgage to compete. Think about it from their perspective. A regular family sees a house. An institutional investor sees a yield-producing asset. You have an emotional connection. They have a financial model. You have to get an inspection and mortgage approval. They can close in weeks with cash. It was never meant to be a fair fight. But their biggest advantage isn't just cash. It's baked right into the system. First, the tax code. This is the hidden engine that supercharges their profits. While you get a mortgage interest deduction, a corporate landlord gets that and so much more. They can deduct operating expenses, property taxes, and maintenance. But the real game changer is depreciation. The IRS allows them to deduct a portion of the property's value each year for, quote, wear and tear, even if the property is actually going up in value. This creates a, quote, paper loss that can offset their rental income, meaning they can collect thousands in rent while legally reporting little to no taxable income. It's a powerful tool the average homeowner doesn't have. Second, when they can't buy enough existing homes, they've started building them. This is the build-to-rent revolution. These aren't subdivisions where you can buy a home. These are entire communities of single-family houses built from the ground up to be rented out forever. In 2024, builders completed a record 39,000 of these homes, a nearly six-fold increase over pre-pandemic averages. They have manicured lawns and community pools, but there's no for sale sign. There never will be. The asset isn't the house. It's the permanent rental income it generates. These companies are not solving the housing crisis. They are building a permanent customer base for their rental empire. They are manufacturing a nation of renters. We've just pulled back the curtain on who's winning and how they're doing it. It's a system that favors massive capital and corporate structures over individuals. If you're finding this valuable and want to understand the forces shaping your life, take a second to hit that subscribe button, because we all need to understand where this is headed. So what does this all mean for the future? The first and most obvious consequence is the creation of a permanent renter class. For generations, home ownership has been the most reliable ladder to middle-class stability. It's a forced savings account and an asset you can pass down. When that ladder is pulled up, the wealth gap doesn't just widen, it calcifies. We're creating a two-tiered society, a small class that owns the appreciating assets and a much larger class that pays ever-increasing rents to them, funding their profits. This structure creates a dangerous feedback loop. The more homes investors buy, the fewer are available for families. This scarcity drives up prices, making renting the only option for more people. This increased demand for rentals then allows corporate landlords to raise rents, making their assets even more profitable and giving them more capital to buy even more homes. This leads to the second major problem. This new ruling class has absolutely no incentive to fix the problem. Why would they want home prices to fall? Their entire portfolio depends on high prices. Why would they want to solve the housing shortage? A tight supply of homes for sale keeps demand for their rentals high. They aren't just players in the market, they are the house, and the house always wins. They profit from the very dysfunction that crushes the hopes of millions. Finally, there's the human cost. These are not local landlords who know their tenants. They are massive corporations with a legal duty to maximize shareholder returns. This often translates to aggressive rent hikes, an avalanche of fees for everything from paying rent online to maintenance requests, and painfully slow responses. The tenant becomes a line item on a spreadsheet, and the community becomes a resource to be extracted for profit. This isn't a free market in the way we imagine it. It is a market engineered to favor large-scale capital. This shift from homeownership to usership is a transfer of wealth and power on a scale we haven't seen in our lifetimes. We are witnessing the privatization of the American dream. So we come back to where we started. The housing market isn't broken. It's working perfectly for a select few. It has become an efficient machine for transferring wealth from the wages of working families to the portfolios of institutional investors. The narrative of a simple supply shortage or high interest rates is a comfortable story that masks an uncomfortable truth. The real story is one of a quiet, systemic takeover. A new ruling class, armed with billions in capital, sophisticated tech, and favorable tax laws, has identified the single-family home as its next frontier for profit. They are not just building houses. They are building a future where the dream of owning a piece of your community is a luxury reserved for the few. The question we're left with is a sobering one. Is homeownership becoming a relic of the past? And if so, what does it mean for the fabric of our society when the foundation of the middle class is owned by a corporate entity that sees our homes not as a place of shelter and community, but as just another number on a balance sheet?